Good evening, everybody. There goes my 8 o'clock bell. Welcome to the market strategy session for May 17th, 2015. So I have a couple of announcements, and then we're going to get right into the market analysis. We're actually going to do the opposite today. I'm going to take the questions first, and then Paul's going to come back at 8:30 and do the second part, or actually the first part, but he's going to do it second. So, a couple of things. First of all, tomorrow night we're having a very special webinar, and it is how to profit from the longest consolidation in the last 105 years. It's all right. I only wrote the title. Gosh forbid I know what it's called, right? So if you haven't signed up and you want to sign up, all you have to do is go to winningedgetrader.com, and there it is. How to profit from the longest consolidation in the last 105 years. I've been sending emails about it, so you probably heard all about it, but if you didn't, just go to winningedgetrader.com and sign up. What you do is you put your name and email here. It'll send you an email that'll give you instructions on how to register. We have to do it that way because there's of the way that our autoresponder system works. There are too many problems with spam complaints, not from us, but other people that use the same type of email service. So just to be certain that we all have your permission and all that, we go through this extra step. So if you want to sign up, there it is, winningedgetrader.com. Paul will be talking, I'll be talking. Now, I wrote an email today and yesterday about this being the last market strategy session, and I got some, pretty nice responses. I got a couple of ones where some people were disappointed. Just so I'm clear on this, we're still going to have the 8 o'clock Sunday night strategy session. Still going to have that. Paul's still going to talk. He's still going to answer questions. We're just not going to be doing specific stock questions like we're going to be starting in a couple of minutes, because tomorrow we're going to be talking about a new service that we are rolling out, and that is going to be part of that. So that's going to be for members, and we're still going to have the Sunday night strategy sessions, so you could still come, stop by and on Sunday nights at 8 o'clock, or I guess next week won't be Sunday night because of Memorial Day. It'll probably be Monday night, or I don't know when we're going to do it. But you're still going to have the chance to ask some questions. You're still going to have the chance to get the market direction from Paul and myself. Okay? So that's it. Let's get started. I want to talk about what earnings are coming up. We have Agilent Technologies. We have not much more. Not much more on Monday. There's still a pretty decent amount of earnings coming out. Not crazy, but a decent amount. But there's nothing that's probably going to move us. I mean, Walmart, come on, Home Depot, these aren't moving us, guys and gals. Sorry. It's just not happening. All right. Dick's Sporting Goods, yeah, just really not going to move us. What else? Doesn't look like there's much more. Advanced Auto Parts. What's this? Best Buy. I always get them confused with Bed Bath & Beyond because they're always, I really doubt anything is going to influence us. Now, as far as looking at economic reports, we go to forexfactory.com. And, okay, so everybody else has sound, right? Because somebody just said they don't have sound, but I think everybody else has sound. Okay, so as far as economic reports, there's quite a few next week. FOMC Evans is speaking at 2 o'clock in the morning. He's obviously overseas somewhere. I'm sure you'll all be up to watch it. 10 a.m. we have the NAHB housing market. 8:30 on Tuesday we have building permits, so that's pre-market. FOMC meeting minutes on Wednesday. That is usually a market mover, the meeting minutes. All right. Yes, there will be a recording, Steve. Thursday, we have French manufacturing. Again, that's pre-market. Unemployment claims, 8:30, and then Philly Fed during the market. Now, I always look at, because we have a lot of new people here tonight, so I always look at anything that's shaded red. I definitely put more emphasis on it, but if it's during the trading day, it tends to carry more weight because, I mean, I don't trade pre-market, and I don't know if you do, or some of you may not even trade at all. You may just be, when I mean trade, I mean intraday trade. You may be swing traders or something, so it may not matter at all. But I always feel that when a number is released during the session, it carries even extra weight. So yeah, I mean, unemployment claims could definitely move us pre-market, but during the market, the Philly Fed, in my opinion, it would be more powerful. All right, business climate at 4 in the morning on Friday, and again, you got 9:30 Draghi speaking, then you got core CPI and CPI. So this is the last full week of May. Next Monday is Memorial Day, so the markets will be closed. There'll be a shadow session, but the markets will be closed. That's a week from tomorrow. There seems to be a lot of numbers, and we want to see how that's going to affect the market. Now, as far as the S&P 500 goes, we are in a pretty long consolidation. Now, Zero Hedge talks about how we are in the biggest consolidation in 105 years due to the fact that there are no new 30-day highs and lows. That changed on Monday because that was a 30-day high. I'm sorry, that changed on Friday. I apologize because that was a new 30-day high. But you see, we didn't break out. We didn't go anywhere. We didn't break out. So we are still coiled up. We still look like we are ready to move. Could we rotate back down and continue to fill this out? Absolutely. Could we break to the downside from here? Absolutely, but it would be a really nasty move from here. Okay, I mean, this would be a pretty nasty move to just lob it all the way down here in one session, right? I mean, a couple of sessions, yeah, all right, it can do it, but we're still above the 200-day moving average, all right? We are in a consolidation here. There are no bearish signals right now that are flashing any warning signs. The only warning signal that I can see, and Paul may have his own take on this, so I don't want to go. I'm only going to spend another minute on this, and I'm going to take your questions because Paul will be here at 8:30, is the only thing that you can say is that the bull market has been going on for a long time. That in and of itself is not a sell signal, and it is not a reason to say to get bearish. I mean, it's a ridiculous reason, if any. Now, there's no such thing as has gone on far enough or has gone too long, okay? Overbought and oversold are conditions that are to be used in conjunction with other strategies and other tactics. They do not exist by themselves, okay? So, because I'm getting a ton of emails and I'm reading a lot of comments all over the place where people are saying the market's just it's just gone on too long now. We have to pull back. Yeah, no, we don't. No, we don't. We don't have to do anything. And complacency can last much longer than fear usually does. Okay, complacency can last for years, and it has. All right, everybody's looking at every wiggle of the VIX to try to catch a sell signal, and it's absolutely ridiculous. The market is in a nice, strong uptrend. Currently, it is pausing, but it is still in an uptrend. It's over all the moving averages. It looks fine. You want to start poking holes in it? Great. Will we get a pullback? Of course we will. Of course we will get a pullback. A pullback is the natural way that the market moves. Just be real careful, real careful about trying to pick a top here. Now, that's all I'm going to say about the market, but Paul will be here, and he will go in depth in the market. And then, of course, we're going to really light the fire under his butt for tomorrow, because tomorrow is going to be a great webinar. I've been laying it out today, getting examples. You guys really should not miss tomorrow night. And without further ado, give me your stocks or give me your currencies or whatever you want me to look at, and I will throw them up on the chart. Please, one stock or request per person. We got a lot more people in here today. All right, a lot more people than we usually have. So please have some courtesy. Everybody, one stock, as Scott keeps laying them out. One stock, and then I will ask you to come back and give me another set. Okay? You want to look at stocks. You want to look at currencies. You want to look at commodities. Whatever you want to look at, I'll look at. So you keep going. Wow, Max is here. My goodness. Just list them, and I'll go back and grab them all. So just list them. Keep listing them. Go ahead. You can keep listing them. All right. I'm going to start answering questions at about 8:13 probably. Don't worry, if you ask questions, I'll come back, and we'll probably do at least one round of these. We'll probably do at least 2 rounds of these, because I can go through them pretty quick. All right. Okay, here we go. Yeah, no, I'm still here. I'm just letting everybody put their stocks in so I can get a good shot. All right. Here we go. McDonald's. McDonald's, the greatest place on earth. So, a couple of weeks ago, we talked about McDonald's and talked about how they're reporting all the earnings down and same-store sales and all this. But yet, for some reason, the sellers haven't shown up here. Stock still looks okay. It's in a consolidation. Really want to see it clear 100, but if it can get above this, there is a shot that it moves higher. Market is designed to always go higher. Yes, it is designed to do that. Doesn't mean it always does, but it is definitely designed to do that. So State Street, I mean, it's not the greatest looking bank, but it is in an okay looking pattern. Looks like it wants to come up and test these highs. So Gil says, what would you need to see on the SPY to make you think we are getting bearish? Well, as Paul will talk when he comes on, he'll get into more details with the market timing he does, but I want to see a pretty glaring divergence with the AD line. I want to see distribution at new highs. I mean, right now, you want to consider Friday a new high. I don't, but I mean, I guess I'm stupid not to, because I guess it is one, but I still have this 212.97 in my sights. I think we're still going to this 212.97 before we get anything. I think that's a breakout. And to me, we're just grinding. So I want to see distribution up here, which is down days on heavier volume than the previous day. I want to see some selling in some of the leaderboard stocks. I want to see the AD line, new highs start to diverge. And, I think I looked at them this week. I think I did my work on them this week. And I can't remember because yesterday was such a disaster for me that it's all a blur. But and I'm not seeing that divergence yet. But Paul's going to talk more about it anyway. He loves to point out the stuff here. He's not really seeing a lot of the canaries in the coal mine here. So Starbucks, it looks like Starbucks wants to go back up to the highs. Gilead. Finally, looks like it finally broke out. We've been looking at this for weeks, and every day, every Sunday, we keep coming back to this one. It looks like it finally broke out. Of course, we want to see if it holds here, but if it holds or it pulls back, maybe kisses this goodbye, I'm looking for this to test this high up here at 116.83. So you could still have a couple percentage left just till it hits into that resistance point. All right, WBA. If I spell it right. Yeah, just getting over the 50-day moving average. Could this be a head and shoulders? It's not really going to be a good one, but, I mean, it's trying to pop up here. Definitely needs a little momentum behind it to get it going. CPSS. All right, let's grab the fib grid on this one. I don't like that it's below the moving averages here, but if we grab a Fibonacci, we see we're at the 62% with a hammer. I mean, we're below the moving averages here. It's sloppy overall, but we have a short-term downtrend. It's got to confirm this hammer, and it's got to get back above the moving averages for me to get bearish on it. Bullish on it. Apologize. FXI. Okay, the FXI is the China large cap. It looks okay. Had a nice shot of momentum here to the upside. And now it is in what appears to be a bull flag. These are a little tough because they do most of the trading when we're asleep or when, I don't know who we are because they're people from actually all over the world that usually come or listen to this. But usually it does most of the trading when the New York market is closed. Okay. BlackBerry. So BlackBerry is sideways to me. I mean, I don't see anything here. And I don't see any advantage of going one way over the other here. I mean, it looks like it's in this range from 12 and change down to 8 and change. And I don't see anything on the short term that says which way it's going to go next. The miners, GDX. This is an interesting setup here. My good friend Mike Swanson, he is waiting for the miners to break out here. And Thursday, they tried to get over the 200-day, but they wound up reversing. And you can see right here, we are now forming a potential wedge. This is GDX, by the way, the symbol if you're playing at home. So it's a wedge. So what is a wedge? Is a wedge bearish? Not necessarily. Okay, not necessarily bearish. It could go either way. It could break down from this, or it could try to get out of this to the upside, go up to the 22 area. Remember, a wedge is, first and foremost, a consolidation pattern. Okay? LCI. Yeah, it looks like it's going to the 200-day moving average. I mean, this is taking a pretty, nice size beating here. While the market's grinding higher, this thing is taking a pretty nice size beating off the highs here. So watch to see if the 200-day holds. Looks like it's going to kiss that. All right, Disney. Full disclosure, my kids own some Disney. They were given it as gifts from a good friend of mine who is two of the boys' godfather, and also from my father-in-law who bought all his grandchildren Disney. We are not looking to sell this based on my analysis right now. I like Disney overall as a company. I do not plan on selling that stock for them. And I believe that Disney is going higher on the short term, but this was a nasty reversal candle back on the 5th. So it has to be respected up there at 113.30 if we were to get there to see if it could break on through the other side. AAL. Okay, AAL is sloppy. It's sloppy. I don't really see, well, you know what? I almost spoke too soon. You do have sort of a coil right here, but overall you could see over the past few months going all the way back to December, it's pretty sloppy. XOOM, yeah, I mean, this one's looking okay. It struggled here at the gap, which is usually what it will do. Okay, this is textbook. It'll run into the gap and it'll pull back. Now it's back above it. I mean, it's got to really add on to what it did Friday, but if it does, this is what's known as the pivot ledge, and this is sitting here in the low 22s, so we want to watch that as potential resistance if it continues to go. Google, sloppy. I can't give you a read on this one. I have no idea. EWG, this is the Germany ETF. I like this pattern here. Okay, I do like this pattern here. Let's see, obviously, if it could break out. Right now, it's only in a consolidation. It has to break out in order for me to be excited about it. CRM is in, I don't know why I read that as an ERM, but CRM is in a coil too. It's a little wide, but it's coiling up as well, so you want to watch this. Dow Chemical, coiled up. If it can break out, should be heading back to these highs back here. The 55 area, DD. Yeah, I mean, this needs a few more days, but this was nasty. This breakdown below the 200 day, that's nasty. It needs a little help there. Here's Auto Home. Yeah, Auto Home is wow. I mean, it's coiling up really tight right here. So we could see if it breaks one way or the other. You got the 50-day moving average as potential support. All right. KR. Watch that 50-day moving average. See if that 50-day moving average comes in as resistance. If it gets above that, then it could be headed back to this consolidation. Now, it's funny. This is a good stock to look at because you see how this stock had this beautiful consolidation here after a very big uptrend. I mean, it doesn't look exactly like the market, obviously, but it's kind of like what the market's doing. And look, oh boy, it fell out. So, yeah, the consolidation trumps the direction, but notice it hasn't gone into a downtrend. This is just a short-term pullback in what looks to be a very, very strong trend. RSX. Yeah, RSX, this is the Russian market vector. I mean, this is really acting nice. It's taking its time, which I love. You know, I love stocks that take their time, okay, or ETFs, whatever, they take their time. I don't like when they rush, and since it's Russia, it would be Russian, right? I don't want to see this thing Russian, but you could see here it coiled up, and now it's just taking its time moving higher. A couple of reasons why I like it. Number one, a grinding type movement is a more sure-handed movement. Okay, it's a stronger movement to grind than it is to get big bursts of volatility. Okay, big bursts of volatility and range expansion can be the start of something, but they usually don't last very long. The fact that RSX is grinding here makes it strong, but obviously you need the confirmation that it continues to go. I also like this because you know where you're wrong pretty easily, which is below the 200-day moving average. So you want to definitely pay attention to that as well. Jack. This is Jack in the Box, one of my favorite places on earth. Don't have them in Jersey, but I love them when I go to California. Could be a big bull flag on the short term, not acting really great, but could be a big bull flag on the short/intermediate term to look at. ARII, I love patterns like this where you get the jump start here, but we got to see this get going. Remember, it's under the 200-day moving average, so automatically I can never get biased to the upside here, but it does look like it has some short-term momentum to the upside. PCAR. Picar looks okay, more sloppy right now, but it is in, again, it is in this coil. Gotta wait for confirmation, but it looks like it wants to go higher. ABT, yep, looks nice. Think it's going higher, a little overboard here, especially for a stock like this, which does not have a lot of volatility, but it does look like it wants to go higher. UCO, I mean, this is the Ultra Bloomberg crude. Let's look at crude oil itself. I mean, it's definitely grinding higher, but I mean, UCO does not look like it's in a rush to get going here at all. It just doesn't. So be careful on that. ABBV, we've been looking at this one, and it did break out here. Hasn't gotten a lot of momentum, so you got to be careful here, but it did break out of the coil. GG, sideways. I really don't see an advantage here right now. Priceline. Priceline. So Priceline, interesting, trading 1,250, a little bit after mark, so a couple points up from where it closed. And you could see here, it had the pullback, the retest. Could this be a double top? I guess so, but right now it looks more like it's just in a range. Right now, it looks like it's in a wide range here, so I can't really give a firm opinion on it. Monsanto, it's too sloppy. Honeywell, beautiful. It's overbought, needs to pause, but this is a nice, beautiful push to the upside. This is what you want to see out of a consolidation, especially if you're buying it on the breakout. And it doesn't get much more beautiful than that. You know, if you bought the breakout, you're looking. My management would be to be looking to pair off some here and ride the rest. You know, put your stop at break even and see where it goes. That's what I'd be looking for. Craft. Yeah, this is a bull flag here, and it's a nice one after a really nice impulse. What did they get? What happened to them? It must have been major news though on them. It's not. This thing's up $20 in one day. What was the news on Kraft? Boy, I really got to start reading freaking Market Watch again. Oh yeah, just Buffett. Buffett likes mac and cheese. Is that what he said? No, they're bought. Right. What's the price? But what's the price? Yeah. Okay. Because this overshot 85 and then came back. Don't be surprised. I know this is the pattern, but kind of tough to take this. I wouldn't be. All right, let me look it up. Hold on. I'm getting too many different opinions here, so it's okay. Turn your mic off. Thank you. A lot of Patriots. Okay. Anyway, they're going to merge with Heinz. Okay. Let's finish up because Paul's back. We did UCO. We did all these. EWJ. Looks like it's moving higher here. TLT. Paul will be going over bonds soon. Apple. It's too sloppy right now. All right, it's still bullish. It's still above the moving averages, but this was a nasty reversal candle here. So this may form a range for a little bit. I'd watch this one. Initiating a new position is definitely a little tough here. I will see everybody tomorrow night at the webinar. Paul is coming on now. We're not done. I'm going to put Paul on right now. Don't forget, tomorrow night, 8:30 p.m. Eastern. And I'll see everybody there. Thank you for joining me today. Paul's still here, and he'll be here to answer your market-related questions as well as go over the market. So I don't know where Paul is. Maybe he left again. but oh, it's not 8:30 yet. Maybe it's not back yet. Okay, URL. I want to do EURL. Oh, he's back.
I'm here.
All right, so it's moving higher here. So this looks good on the short term here. Here is Paul once again. And I will see everybody tomorrow night, 8:30. And here's Paul.
So, dude, when I'm done, what am I doing? Tiny, when I'm done, what am I doing?
You're done, and I'll be here.
Okay.
I'll be here. Bye.
Give me 1 second to set up. Okay. Tiny, thanks for going first. I had my nieces and my ex-sister-in-law over for barbecuing to get the kids together. So my apologies. I made a huge bonfire and we did s'mores. So I made an absolute mess, but I did get a really big blaze going, so that was good. Hope you guys all had a good week and a good weekend. I spent my weekend literally on the softball field with coaching my daughter's team Friday nights, all day Saturday, and today. So, and I haven't showered yet today, so I smell really good. And we had a really nice. I'm just setting up. We had a really nice tournament. It was fun. I got lots of time alone with my daughter. Let's see, there's that. That looks good. And she struck out something like 30 girls in 3 games of, what she pitched, 12 innings? I don't know, 12, 13 innings, struck out 30 kids. So it was a good weekend in the Schatz house. We had a nice big, I took all the girls out for dinner with their parents last night in between games, so it's good team bonding as we get ready for our All-Star season. Okay, that is set. We are set to go. All right, so let's see, why can I see the attendee list? There we go. So last week we came in, and I said what I've been saying all along is that we remain in a 3-month trading range or a large 6-month trading range with an upward bias, depending on how you look at it. I continue to say, as I've said for the last 8 months, 7 months, that this, whatever range we go into, is going to resolve powerfully to the upside. I just kept saying that I didn't think it was ready. I didn't think it was ready. I didn't think it was ready. So here we are again, the top end of the range. Are we ready? It certainly doesn't look like it. Could we go here? Yeah, we could go. I still don't think this is where we blast off. So I'm on the lookout if I'm wrong. Do we poke above, stop everybody in, and then immediately pull back? That's possible. Could we pull back right away? That's possible. Could we have a mini breakout and then pull back again? That's possible. The only thing I still don't believe, and I haven't since early 2012, I still don't believe that we have a significant decline coming. So last week I was on, what was I on? Charles Payne on Fox Business, and I was the only one, which is becoming as usual, who's really bullish. It seems like the more sideways we go in the market, the less bullish people get. So I feel really good about that. The more people who are negative, the higher we're going. To me, it just doesn't look like we're ready to blast off yet. I don't have much cash in portfolio, so it's not like I really think we could pull back deeply. And one of these times, we're going to take off powerfully higher. Just don't think it's yet. I'd be happy to be wrong. I just don't think it's yet. So here's a Dow right back that we're a whisker from all-time highs. I mean, in almost every time frame, price looks fine. It's hard to argue with it. Although you turn on the news and all you hear is everything's so negative. Earnings stink and interest rates are going up and ISIS and blah, blah, blah. But markets have a very different view. S&P 500, voila, looks just like the Dow. We are a whisker higher than an all-time high. It looks essentially the same thing. The most dangerous point in a market is right when it breaks out to new highs or down to new lows. That's the biggest spot, potential spot for a reversal. So keep that in the back of your mind. Mid caps, a touch weaker than the Dow and the S&P, but very hard to argue with what's going on. You can't argue with this. Still looks pretty bullish to me. Small caps, the Russell is clearly lagging. I sold some S&P and I bought some more Russell this week on a theory or a thesis that the Russell plays catch up right back to the old highs. Is it going to happen? Who knows? We'll find out shortly. And the Qs, I still think they're going back to all-time highs this year. We got a ways to go. Their pattern looks different because they broke out here. So this is what I'm concerned about. Maybe the S&P and the Dow break out to new highs and then immediately pull back in and then maybe regather themselves for a run higher. So all in all, the major indices, hard to argue with it. There's nothing in price that says we have any significant problems. Europe, which I own in big size and remain long, I've said it all year long, Europe is going to, on a relative basis, looks better than the U.S. So you guys tell me, what looks so bad about this chart? Short term, it looks good. Intermediate term, it looks good. The clue here was the double bottom. It gave us a really nice base to go boom, diddy, boom. So looks good to me. Emerging markets, another one I've been long and bullish all year. My comment was be careful getting too bearish in here when the other world indices look good. So Friday was a really big day in the EM space. Stochastics really oversold, and now we've got a couple of bullish candles at the bottom and a nice bullish candle on Friday. I'd love to see this week the EM head back to 44. Kind of squeeze the bears a little bit. China, same story all year. I've been long this for what seems like forever, and I remain long. Oversold. Price did not give up much. Looks pretty good to me. It looks like it wants to run back to new highs here. So this looks maybe a little sloppy, but not doing much. And remember, with China, I think Tiny mentioned when I was coming in, so much happens in the gap because China's trading and we're sleeping and vice versa. EPHG. Philippines, I remain long. I sold a little bit here, and I bought Hong Kong. So that wasn't the greatest move because he had two nice, but I still have a half a position left. So this looks sloppy as well. But unless you get really bearish in emerging markets, this thing should hold on and head higher. And I remain long Hong Kong, which to me, as you can see from my notes last week, Hong Kong looks like a power move. We're consolidating this big move from 20.5 to 24, and it looks like it's going to resolve itself much higher, maybe head towards the upper 20s. Before somebody asks, here's Russia. Russia's calmed down an awful lot in the last couple of months. So we've got a really tight range with an upward bias. Doesn't look bad. We're right into resistance. Again, for my money, I'd rather find something else. Brazil, I keep looking at. At some point, it's going to be a screaming buy. We're certainly wound up here. So could Brazil be a trade to the long side? Absolutely. This coil here could lead to a move don't know, maybe up to the 200 day, maybe a little bit higher. So so Brazil looks okay. Let me stop and add any questions on the indices or emerging markets. They have yen. I don't know what yen is. Let me just take a look. Is it the stock or an ETF? Oh, it looks like China. I don't know what yen is. My apologies. Yeah, I'll get to the transports. All right. So give me 1 second. Oh, thank you, Deirdre. Yen is double FXI. Yeah, it looks good. You're playing with fire, but it looks good. Somebody asked about India. Oh, I trade EPI, I think. No, let's spell it right. Here is India. Well, I haven't looked at it in a couple weeks. Hard to be bullish on this. Let's start there. This is really a long-term consolidation. It's getting almost like the old-fashioned megaphone pattern, higher highs and lower lows. To me, it's a pair of twos. Could go either way. Maybe in the short term we bounce a little bit higher, another couple of percent, but I don't think it's running anywhere to the upside. I think somebody asked for Spain, EWP. I like VGK better, which is overall Europe. I think Spain and Italy are the have-nots, so they're being dragged up by everything else. Here's Italy. Italy looks much better than Spain. I take that back. But I like VGK anyway better. Do you look at money flow into the ETFs for clear direction? Scott, I dismiss a lot of stuff for the international ETFs. So keep in mind that they normally gap because they're open when we're closed and vice versa. Excuse me. And I don't put a lot of stake in money flows into the European ETFs. I'd rather look at money flows into U.S. sector ETFs than anything else. Oops. Let me try to do Greece. Nope, I'll try to type it in right. Here is Greece. Looks like a lot of the volatility has been zapped out, sucked out. Right into resistance. To me, it's a pair of twos. I mean, you got a little double bottom here, a little overbought. No real opinion here. I'd like to see it move higher. Greece moves higher. That's going to make my VGK position look all that better too. But I say Greece has a triple bottom. I think you mean 1, 2, 3. I like this as a double bottom better. The problem is you gotta look at volume to confirm that kind of stuff. And relax with this. So I don't love to look at ETF volume as a great indicator. All right, let's forge on to the key sectors. Actually, guys, I'm back in 1 second. I just got something in my eye and I cannot see it in my left eye. So I'm back in. Give me 50 seconds. All right, I'm back. Sorry. I got a piece of what looked like charred or burnt marshmallow in the corner of my eye. Wow, that burned. That's a first. Making s'mores and having marshmallow get burnt marshmallow in the corner of your eye. Thank God, God gave me two eyes. That hurts. Okay, let's go to key sectors. Banks, which I talked about last couple of weeks as, to me, being the next group to take on leadership. Tissue. I'm a mess. I gotta get a tissue. There we go. Okay. Now I got my eyes covered with tissue. So here's banks. I said it last couple of weeks. You're looking for a sector to play. I think banks are going to be the next leader. I'm 100% sure no. I feel pretty strongly about it. I mean, look at this. Look at this last year. I mean, I think this is a giant consolidation. I mean, you guys, tiny maybe call this a kind of cup and handle, rounded bottom, rounded base. I don't care whatever it's called. It looks good. To me, banks look like a good sector to buy for the next move higher. So I'm a buyer of banks in any and all weakness. So banks to me look good. The trannies did not have a good week. So they didn't do any significant damage to my thesis that this whole consolidation blasts off to the upside. But a couple of days early in the week, they did not look good. I think as long as oil stays in a huge range but doesn't really get ahead of steam, the trannies are going to be fine. I think they're just biding their time like the banks did for a move to the upside later this year. And I'm going to do my best to be right on top of this as well as the banks. And the semis, another one where I think they're biding there. They look more like the market, not look much weaker than the Qs. I think this is another group that later this year is going to take off to the upside. So bide your time, have some patience. Maybe if implied vol really comes in these sectors, you can play some options or spreads, something fun. Those are the three key sectors. Don't look great in the short term, but to me, intermediate term look like they're pretty good. Let's continue on to software. We've talked about looking bullish for months and months. No change in software. Still looks bullish. Friday wasn't a great day. Maybe it pulls back a couple of percent, but software continues to look good. Telecom, one of my plays of the year, doesn't look so great right now. I can't say I'm thrilled that I picked this for the year, but it's still higher so far this year. The Verizon deal with AOL, I think, has really good long-term implications. I don't love how this behaved in here. Maybe it's got to percolate a little longer to get going, but I do like telecom second half of the year. Diversified financials look just like the banks, a little weaker. I'd rather play the banks than the diversified financials, but I think they look fine. Consumer, which everyone keeps leaving for dead, and I keep saying rumors of their demise have been greatly exaggerated. They still look really good. This is a nice pattern if you're bullish, because it's going to lead to a pretty good upside resolution of maybe 7 points or 10%. So discretionary looks good. Here the retailer is a big subset of discretionary. Doesn't look as good as discretionary. I'd rather play discretionary, XLY. Home builders, another subset. one of my sectors of the year. I still think this thing goes much higher in 2015. Okay. Even when yields have gone up, these things are hanging in really nicely. So I think a lot of this is baking the cake, and I do think the home builders go up at least to 40. XLI Industrials, to me, it's a pair of twos. I don't love them. I don't dislike them. They're fine. They're just probably go along with the market. Basic Materials, I didn't like them on a relative basis all year. I still don't like them. They're fine, but I think there's better money to be made elsewhere. Energy, which I have liked all year, and I continue to be okay with, although I did sell in OIH. I sold, as I said it right here, half my position here. So I still have a small position left in OIH. And if someone asks me, what do you think now? I'm not really sure, actually. I'm not sure what I'm going to do right now. I wanted to sell on this gap close here, up towards 42. I ended up selling at maybe 39. I'm not stupid. I mean, just because I wanted to close the gap, maybe it does now, maybe it does later in the year. So we'll see what happens. I'd say right now I own a little position, but I would not buy more, and I wouldn't sell it just yet. Some defensive areas, like the REITs, have just stunk. They've absolutely stunk it up lately. And can't say I like them right now there either. Utilities have been really disappointing. One of the sectors I like this year as well. That just stunk it up too. So we're in a range for the last couple of months. Maybe it's trying to base. But if yields continue to go higher, you get a little headwind for utilities. Staples are just killing it. They're just doing dead monies. They've gone nowhere, literally nowhere. And I have no interest in playing them until they get a little mojo, which is probably no time soon. Let's see. Oh. Healthcare, my biggest sector holding. I think it looks fine. I think we're consolidating nicely off of this run, and I think we're going to 80-ish from here. So to me, healthcare still looks good, still a leader. Biotech, my other big holding, doesn't look as good as healthcare. Let's see how this looks. Whoops. Come on, fat fingers. So here is biotech. I think this resolves itself to the upside, and I think IBB is going to 400. So I remain long. I haven't made any money in a while, but I remain long. So those are the major sectors. I'll get to the rest in a minute. Let me see. When you say banks, you like regionals? So, I mean, KRE is the big bank ETF, and I think if you look at the composition of it, you'll be surprised that it says regionals, but I don't think the ETF is skewed to the regionals. Watch, I'll be wrong now. Of course I'm wrong. Oh, I was looking at, yeah. RKH is the one I used to trade. So KRE is the regionals, but look at, here's the major banks. Looks just like the same thing. So whether you look at the BKX, which is heavily weighted to Morgan, Citi, Wells Fargo, looks just like it. So I think all the banks look pretty good. Whomever asked that question, I don't recall. All right. So sector-wise, the major sectors look okay. The farther out you go, some of the other ones, we're just percolating. I mean, I can't tell you how many people keep telling me beginning of every quarter, this is the quarter where the market gets clocked, crashes, major. How many marketers, and I see it all the time, are calling for this big crash? you get some of these knuckleheads like Porter Stansberry. I've never seen a guy make more money from being perennially and habitually wrong. I mean, the first time he's ever right, you should hire a PR firm because he's been wrong for as long as anyone's ever forwarded me his information. And there's tons of guys like that who just sell gloom and doom. The market has a permanent tailwind. Embrace it. Stop trying to be playing for the end of the world, because frankly, it only comes once. And a serious crisis historically comes once every 80 years. So we have an 8% permanent tailwind. You want to play on the other side of that? Be my guest. I don't. I've been flat out bullish since early 2012. Eventually, I'm going to be wrong unless I get our indicators cause that. But market looks pretty good. Stop finding reasons to be negative. Let's see. Let's go to the AD line. While I remember, because I always forget. Here's the NYSE AD line. Does anybody think this action here is bearish? Anybody think this is bearish? Man, when Tiny and I used to do this Sunday night session with some company he worked for, I don't remember who it was, I'd get not you guys, because the ones who hated me left, but I used to get all these hate. People would send me all, you're an idiot, you're wrong, market's going to 5,000, AD line doesn't matter, blah, 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 blah. And then they all just, one by one, they disappeared. All right, so bull market usually lasts 6 years. I think you got to be careful, because all the time horizons and maturities of markets are really visible perfectly in hindsight. So I'm going to pause for a minute and really go on a tangent, because you brought up a good question. So here's the S&P. I can certainly make the case in hindsight. So I can do it. Okay. Watch this. Okay. You asked about the length of the bull market. Why couldn't we call this a cyclical bear market? I mean, the market went down roughly 20%. The market was as oversold here as it was during any other cyclical bear market. I mean, the whole world was getting incredibly negative. Like, this is the end of the bull. They said shoulder, head, shoulder. We broke down. We're going to go down below 2010 lows, blah, 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 blah. The Russell went down 22%, 23%. A lot of people said this was the end, and yet it wasn't. So I want to argue, what if this was leg one of a super bull market? This was your cyclical bear market that bottomed in October of 11, and now we're only 3.5 years into the new bull. That's a what if. Possible, right? We just don't have the normal DNA markers. If the bull market's ending, this behavior is too bullish. Now, if the AD line, this was the end of the rally, then you have at least 2 months to 24 months left. I don't see it. We'll keep an eye on it together, just don't see it. Let's see. Yeah, volume on the spider is low. Whoever just said that, I forgot and read your name, but I mean, is it crazy low? No. Low volume on the S&P and the SPY means that people are trading stocks instead, which means they feel more comfortable taking risk, which could be a toppy sign. But we're not scraping. I mean, look at it. we just had a couple of little mini spikes. It's not like we're scraping along at 50 million shares a day. All right, let's go on. So we covered the good stuff. Take a look at the GDX, which is the gold and silver miners. As you know, I told you here last Sunday, I put on a position here. We did it together, and I sold it right here. So this was an easy one. They hardly ever go that easy. I told you guys last Sunday, which is here, I bought the GDX the day before, and I was looking for a move to the 200-day, which we got, and I sold my position. So it was a good little short-term trade. Bank a few shekels, call it a day. What do I think now? I think it's neutral. I don't have a strong opinion either way, which is why I'm flat. Gold itself looks better than the GDX right now. I did not see this boom coming on Wednesday, although I own GDX, so I was pretty happy. And I still don't think that – I don't think a new bull market launched in gold. Could it rally some more? Sure. Where do I think it's going ultimately? I think it's going sub 1,100, possibly to 1,000. And silver, same premise. There's silver. Touch stronger, but I feel the same thing. Looks okay, but I think it's going to go towards 14 to sub 14. The dollar has been under pressure and continues to consolidate. Smart money is not starting to accumulate it yet, but they have covered a lot of their shorts. So that's interesting. We're probably neutral for the smart money in the dollar. I am still an uber bull long term, and I think this peak's getting taken out long term. We're just not ready yet to start the next leg up. FXE, the euro had a beautiful day on Friday. I still think you're in that area now where when you get a reversal, you can get short the euro. Because I don't think this bounces. I don't think we're going to 125. So, been a good bounce in the euro. Stopped out a lot of shorts, and I think now you can look to get short again on a reversal. Yen, same thing. I have no confidence that they're going to figure their fiscal woes out anytime soon. I think the yen is going much, much, much lower. Someone's going to ask me for the loonie. I think the loonie rally is kind of at the end for now. Could you get short the loonie? Yeah, I think you could take a stab on the short side. Closes above Thursday's high, you got to get out. But the loonie looks like okay on the short side. Let's see, bonds. TLT, which I do not have a position. Very volatile week in TLT. Huge bars, huge intraday ranges. Really oversold. Gap up on Friday. Lots of heavy selling on these red down days. Let's see if the long bond looks any different, a little different. So here's your reversal day, last Tuesday. So I guess I would say this. TLT, you may get a little bit more of a rally up to the, 124-ish or more mark. But I don't think that right at this time we're going back into the 130s on TLT. Let's see. Let's cover the junk bond market. So here's JNK, which I bought back this week. I don't know. To me, still looks pretty good. Stochastics are opening up. The chart does not look toppy. It looks like we're going to get some momentum to break out above 39.50 and run towards 40 on JNK. The mutual funds, the have and the have-nots. The PIMCO fund looks really good to me. I don't own it. I own two other ones, but I think this one's going to go to new highs as well. So if the bull market were close to ending, junk bonds would not look as good as they look right now. They wouldn't. They'd look a lot crummier. Okay. Let's see. We covered. Let me think what I missed. Let's do copper. So somebody tell me what my opinion of copper is, please. What do you guys think my opinion of copper is? Let's see. Consolidating, go higher. Yep. Yep, you guys, for the most part, I mean, this looks really coiled up. We have huge expansion days here, just like we had here. We worked it off, and then we went again. We're above the 200-day moving average if it matters in the commodity. But to me, it looks like this thing is geared up and ready to explode higher. Natural gas, we talked about last week as being bullish. We left right here. And I said, looks good, looks like we're going higher. Smart money is so locked and loaded on the long side. This day would have been tough. This day I would have gotten really nervous, and I probably would have sold some. But the next day could not even have a one-day follow-through. I still think natty gas is going higher. Crude oil, I did sell a little bit last week up here. But I think this should move out to the upside. Get towards my $65 target. Let's take a look if I missed any questions. JN said, does JNK volume look like accumulation or distribution? JN, be really careful. Volume in ETFs does not have any significance for accumulation or distribution. In fact, it's probably the opposite. Probably the opposite of stocks. So don't get hung up on volume in ETFs. It doesn't hold water like it does in stocks. I can tell you that with the consolidation in JNK, you had huge money outflows in JNK, in the mutual funds and the ETFs, and it was trading at a modest discount, which is usually a bottoming sign. So I do think JNK goes higher. Let's see. Any other questions I missed? Could you show a D line 07 to 08? I could. Let me just see if I put it on this computer or not. And I didn't. Hold on one second. Let me look on my. Let me see if I can on my flash drive and see if it's here.
Here's an interesting statement. My friend Andrew, who lives in Philadelphia, wrote me and said,
Wait, is this a commercial?
What?
Are we doing a commercial now?
No, I'm just talking while you're going through this stuff. He said that he just had the best clam pie ever right now. He said, best I ever had. Guess where he is?
Pepe's.
Frank Pepe makes the best clam pie I have ever eaten, hands down, off the hook.
It's up there.
I said, I already told you that. And he said, I know.
That's my backyard.
And this, by the way, is not the first time he's been to Pepe's, but it is the first time that he has had.
Wait, who's Andrew?
My buddy in Philadelphia.
Oh,
He's
I would invite him over to my house for dinner. He could have brought a pizza up and then hung out and had some drinks.
great. I think he was in Harvard or something. I think he
Oh.
was at Harvard this weekend, and now he's on his way back and decided to stop with you Yaleys and talk to that.
Sally's is still better than Pepe's, but I understand why people go to Pepe's. It's,
It's
it's probably
not,
more.
but okay. All right,
All right.
back to you.
All right. Thank you. So whomever just asked me about the AD line, IEE. What's your IEE? Is that how do you? Forget it. I'm not gonna go there. Here's the AD line from '07 and '08. I think you asked me this. So in '07, the AD line peaked. Well, let's call it June 1st. There it is, June 1st of '07. The market peaked in July. AD line had a lower peak. Market sold off 10% in the August low and then went to the final high in October. So look what the AD line did. Lower high, even lower high, and the market went higher. That's a clear sign something ain't right in something's rotten in Denmark, as somebody said. Everybody got that? Okay. All right. Let's get rid of my flash drive. Okay. So where do we leave off? Oh, we're left with the commands, and then we're done. So last week, a lot of them looked bullish coming into this week. There were no secrets there. Let's see how we did. Wheat. Oh boy. We had a nice week, didn't it? We talked about the divergence last week. And oh boy, look at that day on Thursday. Every once in a while, blind squirrel finds an acorn. Corn. Corn I liked coming into this week, and I still like it. I think it's really going to try now to rally. Let's keep an eye on corn. If we're wrong, you get out on a close below the recent lows, which is small stuff. Beano. Beano we didn't like yet. We kept waiting for something to happen, and still nothing going on. So we wait. Cotton, I was questionable because I like this move. I don't like this candle. And me a pair. I'm neutral right now on cotton. Pair of twos. Sugar looked good last week. Wednesday was a crummy day. Big red candle, which you know I hate. I still want to give it the benefit of the doubt. Look what cocoa did last week. Wow. Came into it looking okay, and boom. Wow. When these commods go, and they really go, this is crazy. Whew. That is a beauty move. And a few Starbucks. I went to Starbucks today, which I don't like coffee. I was at Lowe's, and it's such a headache. I had like a nerve inflammation, a nerve in my face that went from my cheeks into my head. So I took, and it gave me a headache. So I went to get some caffeine, and then get my daughter a Starbucks Frappuccino because she did so well. In any case, so I was at Starbucks. Coffee is nothing. It's nothing with nothing. No reason to trade it. Any other questions, comments, concerns, quibbles? Last call before yours truly takes a much-needed shower. I just smell. I know. Thanks for sharing. Gotta make sure. I'm so paranoid. I don't know if you guys have seen that killer tick that's in Connecticut now. It's in Connecticut and Ohio. It has Powassan virus in it. that there's no treatment for it. It just kills. So I'm so paranoid about this freaking tick. Let's see. The meats, Scott, if I pull up the meats, it won't do any good. I don't look at them. Maybe I'll start because I don't want to give you just a flip comment without looking at them that often. UCO, Tracy, what the heck is UCO? ProShares, Ultra, Bloomberg. Oh, I mean, Tracy, it's the same thing as looking at USO, but it's just leveraged. I think it looks fine. I think it's going higher, is the best way I can describe it. And TBT, somebody who asked, it's just TLT upside down. Here's TLT. I do think it's got some rally left in it, which means that TBT probably continues to pull back some more. So I'd be bearish on TBT. Joanna, I have no idea. We always ask me about uranium, and I always say I don't have the symbol. So I don't know what the symbol is in each signal. If you grab me the symbol, I'm happy to look it up because we've looked at it before. Anybody else? Questions, comments, concerns? Moving at IEE. We got it. I need to call you something. IE is too long and too cumbersome. Moving average for what? I mean, what are my moving averages? Is that your question? Oh, so I'm not sure I would say I use the moving average all that much, but I'll tell you what's on my charts. I use either a 20 or 21 day. 21 because it's 21 days in a trading month. I look at the 50 because everyone looks at the 50. I look at the 89-day EMA because Tiny Ones told me it was the magic bullet. No, because it was a Fibonacci number and it was an intermediate term moving average. Most people look at the 100-day. I have the 150-day, which is very popular, along with the 200-day. Those are the big moving average I look at. I never trade based on the moving averages. They're just long-term smoothing constants. There are no magic bullets, I promise you, in moving averages. In fact, if you went to what class did we do? Market timing, mastering money, something, blah, 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 workshop Tiny and I did. I showed you all my research with moving averages, why you can't develop a trading system just based on a moving average. It doesn't work. You can make money, but you don't add enough value to make it worthwhile. Here's uranium URA. I have absolutely no opinion. I'm sorry. Zero. Even trade? The problem, these commodity ETFs are designed so poorly. I don't know. I shrugged my shoulders. Sorry. Last call. Questions, comments, concerns, quibbles? Nothing. So I think, I didn't hear Tiny, but I think he mentioned we have his webinar tomorrow night, which he probably did a good job of selling on. I'll be here chatting. He'll be here chatting on it tomorrow. Should be, regardless, it should be fun and worth your time. It's not going to be a long one. And then I know, well, I don't know how he's doing the offers on it, but it'll be worth your time. Joanna said, would it be interesting to start looking at the shipping stocks? I don't look at shipping stocks usually, although maybe I should because I trade China. And I may email it to me. Let me know. I'm happy to put it in my list. Like we don't cover. I look at this on my own every day. FDL, no, I don't. FDN, which is the internet ETF, is a good one to watch. As is SOCL, the social media ETF. It's a bunch of those kind of smaller ones. TAN, you guys like TAN. The Guggenheim Solar ETF looks like it's going to new highs. So if you got some of these and you want me to put them in the routine, happy to do so. The airlines. Somebody asked about the airlines, and here's the airline index, XAL. I think it looks stronger than the trannies. Here are the trannies. Okay, so the airlines look stronger than the trannies. And to me, they're just percolating and ready to break out to the upside. So I would say from 102, I feel pretty good. They're going to 110 to 120. I can so cavalierly say. I don't own it, but I think it's going there. Yeah, the airline ETFs, it used to be FAA. I think that they closed that already. They did. And someone said just jets. Oh, it's a new one. I have no interest in looking at a new ETF. What the heck is DSX? Oh, it's a shipping company. Yeah, maybe Joanna, see if you can see if there's a shipping ETF. I don't know of one, but I'm happy if there is one. I'm happy to put it in the on the list. No, just because the airlines are rallying doesn't mean that crude's going down. Crude can certainly rally, and the airlines could rally too. Now, if crude gets towards 90 again, airlines got trouble. But right now, I'm also going to bet you, IEE, that the airlines did an awful lot of crude oil hedging when oil was down. I think they were smart about that. Dave Lee asked, "What is smart money?" So, Dave, on your own time, you can Google the Commitment of Traders report, and it just shows you on a weekly basis where the small speculators trade, the non-reportables, the little guys, mom and pop, because they're always wrong, and where the commercial hedgers trade, they're usually right. That's smart money. Somebody, a bunch of you guys said C is a Guggenheim ETF. So funny. I'm on Guggenheim's advisory board for the Ridex funds. I never knew about half these products they have. Shame on me. So here is C. That's a good ETF for me to watch. You guys remind me every week about C. So we see in C, there's double bottom, and it has not fully played out yet. We're just getting to the top of the range. I mean, this one, if this thing gets going, I'll argue we're going from 20 to new highs. This looks okay to me. Thanks for bringing it up, Joanna. Remind me to do this every week. Okay, gotta pull questions back up. Let's see. Do not know it should be. Jan. Sorry, I gave Johanna the kudos, but it was Jan. Nice going, Jan. Once it's Jan, I totally pronounced it wrong. I have a friend named Jan, but he spells it I-A-N, Ian. And he gets mad when you call him Ian, so I call him Ian. But his real name is Jan. Let's see. What was the name of the website for Smart Money? Gil, it's not a website. It's a weekly report that's put out by the CFTC. So you want to Google Commitment of Traders Report. Commitment of Traders Report. Where are you next on Charlie? Oh, on Charles Payne. Like Charlie. I don't know any Charlies. This Thursday, I'm on Fox Business 6 to 7. This Thursday, 6 to 7 on Fox Business. Or do they call you only when they're pullbacks they need a bull? No, actually, I really like the Payne show. It's fun, and I like Charles. He's a really good guy. If I could commit more, I'd be on more. It's just a real pain in the rear end for me to leave, unless I have other business in the city, to leave at 2:30, get to the city by 4, park, walk to Fox, be there by 5 o'clock. Show goes 6 to 7, get in the car at 7:15, get home 9:15. So it's a lot. It's almost 7 hours of commitment. If I was closer, it'd be great, but I'm not. And I'm not important enough for them to ask me to do it remotely. So I'm happy to go in, 2 or 3 times a month. Don Draper. I've never seen that show, by the way. Mad Men. I know it's ending right now. Deirdre, do I mostly trade ETFs? I do trade ETFs, and I trade um, the ETF RIDEX fund equivalents as well. Don't trade a lot of individual stocks, although I think on this newsletter that Tiny and I have been talking about doing for 100 years, I have a whole bunch of mechanical systems that I may throw that in the mix too. I just won't do it when we launch, but I will give it a shot and figure out how much work it takes for me. Because as you guys hear from my uh, comments when I start, I'm always sitting a bunch of boards and I'm uberly involved with my kids, and I won't take away from kids' time at night. But if I can find a way to automate my work, then maybe I could put some stocks out too. Okay, what else? What else? Any other questions, comments, concerns? So the takeaway is futures are down, nothing, and you come into the week, market looks okay. Some short-term back-in filling wouldn't be so bad. I just don't think we're anywhere close to a significant decline. And by significant, I mean 10%. I don't think we're there yet. So that is all. Those of you coming to the webinar tomorrow night, I think it's at 8:30. We'll see you then. If not, we shall see you next Sunday. All right, Tiny, I'm done.
Yeah.